U.S. markets here, we're, what, 2 to 2.5%, 3%, depending on your index, away from record highs. Do you believe that we will achieve new record highs for the U.S. markets sometime this year?
I wouldn't be surprised. I don't know if it's a certainty by any means, but what I'd be looking to do is look into some of the laggards. And I think U.S. healthcare is an area that's lagged this year. If you're buying stocks that are at all-time highs, they've run out of room a little bit. But the U.S. healthcare trading at multiples it got to in the last election cycle, trading at multiples below where the Hillary Clinton tweet from 2016 about price gouging came out. So there's some political uncertainty around healthcare stocks, but if you're picking them up at less than 15 times earnings, they're growing probably in lines to slightly faster than the market. That's a defensive sector that I think you really should be rotating into, given the fact that it's lagged, while staples and utilities have performed very well because of their high dividend yield. So I think stocks that aren't at all-time highs, trading at discounts to the market, you'll do pretty well in.
So you're not concerned about the fact that politically, and I'm sure you're aware of this, Patrick, that certain leading Democratic candidates have effectively called for the end of private health insurance in the United States. I mean, this is an industry that a sector, at least in parts of it, that are squarely in the sights of some of the leading candidates for president next year.
They are, and it's no certainty that we get a Democratic president. It's no, you'll have the Republican Senate anyway. And I don't think the political posturing that'll happen leading up to an election, once you get into governing, will be as strong as the rhetoric leading into the election. So I think there'll probably be a lot of sound bites, a lot of negative, maybe headlines for healthcare. But picking them up at 14, 15 times earnings, the growth basically is already discounting to some extent some of the political headwinds that are there. And it's basically a great time to be buying healthcare when there is a clear risk that may not materialize. And I think with the Republican-held Senate, the worst-case scenarios for the healthcare stocks won't materialize.
Okay, U.S. healthcare. Now, if you're going to talk about valuation, you could make a strong case that there is no market in the world that is as cheap on every single metric. I mean, you could throw a dart at a wall and it will come up with the Japanese stock market being super cheap, and yet investors, they have seemed not to care at all. The Nikkei can't get out of its own way.
Yeah, and I think if you are worried about basically an economic slowdown, if you're worried about trade wars, hard Brexit, all of these things, risk aversion, we think, will probably stay high for the foreseeable future, and the safest safe havens are now overvalued. So you've got 30-year treasuries yielding less than 2%. And I think looking into a way to get yen without paying negative interest rates, if you buy the domestically orientated Japanese stocks, you're getting dividend yields of 4 to 5% on some of them. Last week, we bought NTT Docomo, Japan Post. These are driven by the Japanese consumer, which has actually been pretty resilient. And as you say, on price to earnings, dividend yield, EV to EBITDA, the Japanese market has never been cheaper. So we're talking about the U.S. market near all-time highs. You're getting very discounted valuations in Japanese equities right now.